Welcome to Power Charting. I'm Bruce Fraser, I'm your host, and we have a great session for you today. This is one of my favorite things to do, which is to go into the intraday time frame and study the vertical charts and the point and figure charts, and obviously always with a Wyckoff orientation. Now today, we are recording this on May 9th. For original broadcast on May 10th and thereafter. And this point is important to make because we're looking at smaller time frames. So you may be looking at this video in June or July, and I believe that the content within is going to be very valuable and interesting to you, but clearly it will not be timely to the current market when you're looking at it. But the idea here is not so much to make market calls, but to impart this information about these great tools that we have that are so different and unique from the tools that other traditional technical analysis tools, which are wonderful and I use them all the time. But I think you'll find that this is very compelling work. Okay, so let's have a look at our agenda for this episode, and we're going to focus on intraday point and figure with some work with the vertical charts. We are going to study two stock indexes, and we will do intraday point and figure analysis on them. We will do some trendline analysis on point and figure, which we haven't done much of, and it works really well, as you will see here in a minute. And we will estimate point and figure price objectives intraday, and we will talk about some of the pitfalls of using intraday point and figure. And so let's get started. First of all, the TSAA SF, which is this wonderful not-for-profit educational society oriented towards technical analysis, has events every month. And these events are very compelling. They're designed to be useful to our membership, to help us develop skills, move us towards mastery. And we have a wonderful presentation with a fellow blogger from StockCharts.com, David Keller. And David, on May 16th, will be doing a webinar on the 5 R's of behavioral investing, which is so useful. And he's so good at the mental side of investing and trading in the markets, and also an exceptional technician. And so we never want to miss the opportunity to hear David speak. Also, he has a wonderful blog series called The Mindful Investor, which is right there in the blogging section with my blog. I know you read my blog, and you definitely should read David's. You should read everybody's blog. But anyway, this is a must-see event. It's very reasonable to be a member of the TSAA, and you're part of an exceptional organization. So please become a member with us and enjoy some of the great content that comes along every month. Okay. Here we have a chart that was originally published on March 5th, created on March 5th. It's intraday, 30-minute data, ATR scaling, and 3-box reversal method. So for an intraday chart, it actually covers a lot of information, and a big time frame. Here we can see that into the December-January time period, a accumulation period developed, and this accumulation period was very small in time, but very large in terms of extent. And it did a wonderful job of telling us just how far this rally phase in the first quarter could go. Now, so we can see here that at the count line, which is at 22,698, we had a count that generated an objective of 26,075, 27,013. And this count was a wonderful, straight up, persistent advance, And you can see here using trend line analysis that we have, and we draw our points here and here, reverse use of trend lines, that gave us the stride of the advance, and at the end it threw over. It's not really the end, but it said that there was going to be a pause of sorts because it became climactic, which could be seen very well in this chart. Thereafter, there was a correction that ensued, which was a significant correction that came back down to the bottom of the channel. And so we can see that there was an attempt to stop in this area after climactic intent. And we have three things at work here. We have a point and figure count that's been fulfilled on the Dow, not the case on the S&P and the NASDAQ, which continued to move higher pretty persistently after the Dow started to slow. At resistance, you can't see that here, but there's the resistance area that you'll see on another chart in a minute, and then the trend line throwover. So we have this trading trifecta which says, okay, prepare for a pause. This is may not be a correction. It's too early. We need to build a cause, just as we built a cause here. Seemed like the market just made a V bottom and turned up, but here's this beautiful point and figure count. Okay, so just this is just to orient you, and you can see that on the next chart that there's the buying climax of January 2018, which produces a resistance line, automatic reaction that produces a support line, an upthrust here, huge shakeout. Our point and figure count was right here. And then notice this advance that we had that went right back up to the resistance area, as you can see here. And this is the resistance area that we just referred to. All right, so now you're oriented towards the area that we're spending time analyzing. This was made for the Market Watchers Live that I did on May 2nd, and we'll come back to that in a minute. Now, I drew another point and figure chart. This was 60-minute data, Dow Industrials, 3-box reversal, ATR scaling, and this gave us a count, which was slightly different. This went up to the 26,432 area and the 25,514 area, but here's the throwover. And so when you change time periods on the ATR in 60 minutes, your counts are going to change a little bit. Not a lot, but they will change a little bit. That's the case here. So it came into our count area, reacted all the way back down to the bottom of the channel, attempted to rally, could not get back up to the top, and then came into the oversold area of the channel and fell through it. Now look what happens. It rallies up, but only rides on the bottom portion of the channel from that point forward. Last thing I want to do is I want to show you this downtrend channel. We draw on this point, we draw on this point. We have an oversold line here between these three areas. We're able to draw a channel. Look at it at the end of December, the throw under of the channel on a climactic decline, and then an immediate turn back into the channel, and it rallies up to and through the channel and then stays out, comes back one last time, tests the top of the channel from above, has a good test, tests it here again, and then begins its rally. So this is a really functional trend line and trend channel analysis here. So this is traditional use of trend lines, by the way, is to draw your first trend line over a declining market and then draw the oversold line below it on a parallel. So here we go. Let's go to the next. And so now this chart will look familiar to you if you saw Market Watchers Live on May 2nd, because I put up this chart really with the intent of having a discussion about intraday distribution. Now this is 5-minute data. Now 5-minute data is different from 5-minute charts on the vertical. And you often get much more data on short-term point and figure than you do on the vertical charts. And this chart goes all the way back to April 3rd. Beautiful trend channel. Look at this. We draw a point here, here, and we have a traditional use of trend lines, comes down, tries to go through that channel, rallies up to the top of it, and then turns off of that, and that's where we were on, well, at the end of May 1st. And so parallel line is drawn across this peak here, and you can see that it does a wonderful job. Okay, so this count here to here, 30 columns, one box reversal, so 30 times 1 times 9.32, which is the ATR scaling, which gives us an objective of 279.60. This count, we were surmising at the time, may not be a completed count. But the thing that caught our attention was the series of lower lows that were taking place, which were indicative of increasing volatility. This is really important because the volatility increasing as you're going through a range-bound market is often an early clue of distribution. So we want to be on our toes. So we took a count here because this rally actually was slightly below this peak, and it gave us a decline down to 75.67, 75.02 from the count line of 78.47. So this is about, I believe, a 4.5% decline. But the question we had is, can this count grow larger? Okay, so let's have a look. So first of all, I want to just show you these distribution schematics and how you can go see these. This is, I'm showing you distribution on an intraday time frame. So we could argue this is a tempest in a teapot. It's a very small time frame that is useful for short-term traders, but it also can inform, in my case, I'm more of a swing trader to a campaign trader, can give me an idea about the intentions of the market at a point in time that might be much more sensitive than we can see on the daily charts and the weekly charts, and give us a little bit of an edge about what the market intends to do by looking at this intraday time frame. So here we can see all of these elements. I want you to keep these in mind as we go through these future charts. And here's our little guy who's got his feet in the tub of hot Epsom salts, and he's had a bad day on Wall Street. So this must have been a distribution day. Well, here is our time period that we just looked at. And so let's see if we can't highlight this. So this area here is the area that we counted. And it gave us that count that we just flagged. We'll look at that again in a minute, but notice what happened. Big, after that, those two peaks in that count, which we did on Market Watchers Live, there was this huge sharp decline into a sign of weakness. And then a rally, a very sharp rally back up, which gave people a sense of relief that the market was recovering and getting back to its highs again. But notice this, lower high. This was a lower high here. This is a lower high, and then a sharp break with a gap that is another lower sign of weakness, and then a rally back in to a lower high LPSY. And we were of the mind that we might have a much bigger point and figure count available to us if the distribution continued to unfold. Well, look what happened. So now let's look at the NDX on a point and figure, including the data up through May 8th, which is yesterday as I'm recording this. And so you can see here's our original count, and this is where it took us right to here. Well, notice this, it took us right into the area of this pause that occurred. And then we have a larger count. This count, which we were wondering if this was going to happen. Well, look, we have a downtrending channel. That channel was drawn on 2 points here and here. And I actually took the peak that was right here just outside of these 2 points to draw the parallel, and that was just to make the parallel a little wider. And so here we see that this bigger count takes us down to an area that we have yet to attain, about 74.18 down to 73.62. And so lower prices, we actually hit the first objective. We'll look at here. We have a redistribution, and a redistribution forms, we can count that redistribution, and it gives us a count down to right into the range of our larger count, which helps to confirm that this is where the market wants to go. So we can see here that oftentimes when we create a count that matches the larger count, that's when the market, from a timing perspective, is ready to go down again. Well, that's exactly what happened. And look at this rally, very poor rally, flat, kind of meandering rally attempt, which is a sign of overhanging supply and lack of demand, and it goes right to the top of the channel and then fails. So that's a great case study analysis right there. Last thing I want to do is just show you this trend channel so that you can see it without all the other stuff on there, and you can see how well, look at these up thrusts that fail right away. This is an overbought condition, and comes right back into the channel, does it again here, and then here we have that poor rally, goes right to the channel. This is just a terrific signal, and then boom, down we go. So now let's turn. So here is the daily chart, and this is the area that we just analyzed on the intraday. This makes the point that even though we can see the elements of distribution here on a very small scale, by the way, that this is not a distribution that suggests that there's going to be anything more, at least at this point, than a normal correction. So here, but look at how going to the intraday gave us a lot of detail and color on what the market had intended to do. Okay, so now let's turn our attention to the Dow Industrials, and we're good on time so far. But this also is a chart that was from the Market Watchers Live presentation that I made. And here we drew these 3 lines that basically were across the area of consolidation in an ongoing uptrend. So you can see this uptrend, and each one of these thrusts is a thrust with diminishing result. And Dr. Pruden used to call this, he called this a poor man's momentum. And what he really meant by that is that you can identify waning momentum by just watching the vertical charts and the point and figure charts, and identifying the inability to have good, robust thrusts to higher highs where there's ease of movement and a good spread of price and time and volume. Well, look what's happening here with the volume. So this volume here is these 3 X's. This is effort in volume without result. So we have a lack of result. Here we have a high volume with these bars right here, lack of result, effort without result. And here you can really see it dramatically. Here, a lot of volume and lack of result. So we can see that there's elements of the qualities of supply that are showing up around the peaks in this waning momentum picture. The thing that we said at the time was that we have a count right here, a small count. This is a trading count that goes down to 26,076. Remember that number. And we have this trading count, and we have waning momentum. Well, also this peak right here, which turned off of, was lower than this peak. And so that's a real sign that momentum has slowed dramatically. So we have this waning momentum. We have a count, a trading count, and the count line is 26,667, and that is approximately 600 points down from here. So this is an important trading swing on an intraday basis, 5-minute data, 1-box reversal, ATR scaling. And so the question that we asked was, well, let's try to use our visual imagination to see whether it was possible that we were in the early stages of distribution here, and that if we got this decline down to this count that we had created, a small trading count, which was in the area of important support, that a rally after this back up could be a last point of supply rally, excuse my penmanship, and that this could be a larger, admittedly on a 5-minute data, larger distribution forming, and it may not be done yet. And so we want to develop a skill for being able to see these things unfolding, in this case, while the uptrend is still occurring. And so then it gives us a way to be able to script what could happen next. Wyckoff is a great methodology for that. It's very exciting that we can do that, because now we know that we need to see a sign of weakness and a rally into a last point of supply to suggest that we are reaching the end of distribution. Okay, so here again, this is now 10-minute data, but it's the same period, the same thrusts, and ATR scaling is 38.95 and 1-box reversal. And so now we're asking the question, can it get down to this support line and make a sign of weakness? All right, so let's see if that happened. And here's what happened next. So we had a decline. Here was our count. Well, there was actually a little bit of a rally that occurred before we got all the way down. We only got 2 boxes away from our initial objective. We had a rally that went to a lower high, which again is further evidence of distribution. And then we had the break off of this weak rally into a sign of weakness, and we went down to a lower low and then rallied back up, and at that point made another lower high. And so we have now a cascading decline down and out of the structure of what appears to be completed distribution. And this is very interesting and is much larger than the initial count that we took right here. So this is a fascinating picture. Okay, so obviously now the other thing is, let's look at this. Look at this rally. Look at all the overlapping. These are 1-box reversal. It's just a rally of meandering, low quality, low momentum, lack of good demand here, lack of sponsorship from the CO along here. Well, look at how that compares with these rallies. These are sharp thrusts upward. Well, once you're down and out of this area, this is all what we like to call the area of the ice. And so there's a lot of supply overhead. You're below the distribution area. This is evidence that the downtrend is in force. So now we want to ask the question, well, how big is this count that we have? Well, here we go. So notice here's the last point of supply here. And you can see this is the rally to a lower high. This is the original count that we took, really kind of from here to here. This was the count that we took that got us to the support area just below it. And then we have this count. Well, let's take this in 2 segments. So the first segment is from here to here, and this segment is 40 columns, and it's 40 times 1 times 40, which is 1600. So we take it from the high here, which is at 26,680, and we subtract 1600 from that. It gets us down to 25,080, and then also from the count line, which is right here, 26,440, and that gives us a count range of 24,840. And so we have these 2 count areas. This is the range of the count that we have in here. And so we have potentially further to go. This is as of today now. It's not up to the minute, but it's through May 9th. And you can see that today the market has just come down after this rally of poor quality. It's just come straight down, which shows that there's no demand for stocks by the large interests, the composite operator type. And so the composite operator is no longer supporting this market. They were supporting it up here because they wanted to continue to sell stock as long as they could in the distribution area. But now there really is no good support and the market is moving easily down. Now, again, keep in mind that this is all within the context of a short time frame. This area right here, that peak there, is actually April 4th. And so we're looking at a distribution that forms over just over a month. And again, in this case, 5-minute data, but we can see that over a month's period that we have a rather large distribution from a trading perspective. And so for you intraday traders out there, or you swing traders that want to be able to identify these important turns early on and really precisely be able to define your trading tactics, where to get in and so on, and maybe we'll have a minute here to talk about entry strategy, is this is just a great combination of tools for doing that. So now a larger count actually goes over 53 columns, and so here we have 53 columns, gives us an objective downward of 2,120 Dow points. And so this is the second objective. My advice about this, or my experience, I should say, about this is that if we do get down to this first objective here, that oftentimes what happens is we get a consolidation of sorts and then an attempt to rally. And then we'll redistribute for the lower objective, which in this case is 24,560 to 24,320. Doesn't have to do that. It could just go straight to that level. And this is where we get into some of the pitfalls. Is the thing about intraday point and figure is, even though it, in this case, look at the value of this, even if it doesn't get to these objectives or it goes through these objectives, notice how well, using this for our tape reading chops and skills, this distribution that we're analyzing did such a good job of being able to tell us what the market intended to do. But the thing is that we have a much larger count potential. Okay, and the thing is that there is variability in intraday charting. Okay, so here is the area that we just analyzed. Here's the downtrend. Here's a trend channel. You can see this on a 60-minute chart. And then here's the daily chart, and you can see that all of this is in the context of a very small area at the top of a very good rally. And with that, just point out that you can go to Wyckoff Trading Methods, and you can observe the different on-demand offerings. I have my power charting videos there, but I want to point out here that there's 2 wonderful Wyckoff point and figure tutorials that you can use to study what we talked about today, and do see Dr. Pruden's last webinar, which is a classic. And with that, thank you so much for watching, and we will do this again in the future. Have a great week. Goodbye.